So as a reminder, press the button and then notice that you don't have to hold it down because it turns green, which means I think that when you want to stop talking, you have to press it again. So the meeting's called to order. Let's call the roll. Commissioner Barbara McKenzie.
I am here.
Commissioner David Cahill.
Here.
Commissioner and Commission Chair Deborah Doyle.
Here.
All right. We have no announcements, and Lisa has confirmed for me that there are no members of the public who are present or who submitted comments in advance. We have a lot to cover, so I'm going to suggest that we launch right in. Myrna, it's great to see you.
Hello.
Thank you for the excellent summary notes on the monthly financials. I think in the interest of time, I'm not going to ask you to repeat everything, which I thought was very clear. I guess a question for you, and then I'll turn to the committee. Was there anything particular in the summary that you wanted to highlight for us? And before you speak, please push the button.
Thank you for the opportunity. Just to summarize, I just wanted to say that we're on target for meeting our revenues. And that's pretty exciting, given all the news and uncertainty that we hear about what's happening in the economy today. So the library is in a good position to end this fiscal year. I did include additional information given your requests in last Finance Committee regarding other contract services for you. And they tend to be on the little in terms of that one line item. They tend to be higher than what's budgeted for that specific line item. But overall, in terms of services and supplies, one of the best practices is to allow to control at the higher level of services and supplies. But it is certainly my pleasure to provide you the details that you're requesting and answer any questions you may have on that. Under all other expenditures, we're expecting to be under budget, spending under budget in services and supplies. And so one of my priorities is in future years, like in fiscal year 24, is to provide better estimates in the budgeting, so that you don't see these large underspendings in one category. And so under services and supplies, I'm still anticipating a savings, and also under capital for the various reasons that we already know. So that's the summary.
Thank you very much. I want to say I appreciate the work that you and your team did in itemizing all of the other contract services. Before we get back to that, I'm going to ask the members of the committee, do you have any specific questions or comments on the other aspects of the financial reports, not including the specific detail for other contract services? Deborah, no. Dave, no. Barbara?
Any of these reports?
Any of the reports except for the detail on other contract services. While you're looking, I had a question for Myrna. I was really glad to see that the revenue is on track. This is sort of a self-education item, Myrna. I knew we were expecting the second property tax payments to come in April, and I see that we got them. I also see, and I sort of in my mind simplistically thought, okay, well, that'll bring us to 100% of our property tax revenue. And I saw that it didn't. But then I also compared with last year, and we were at a very, very similar situation. In fact, we've collected, it looks like, to me, about $550,000 more so far than we did at this point last year. And last year we did meet our target. So I guess my question is, are some property tax payments just late? And that's why we're not at 100%, but we likely will be?
Yes, some payments can trickle in, and historically what happens is that in the month of June, there's a reconciliation, and normally it's over $1 million that are posted there on average. So I am expecting that as well this year. I don't know that, I don't have any reason not to.
Okay, thank you. So just as a reminder to the committee, you did include the statement of special fund activity, but unless there's been some rebudgeting, we shouldn't see any change here, correct?
That is correct. It remains the same as the last one.
Okay. And I didn't have any questions on the voucher payments over 50,000. So Barbara, did you have any question on the overall financial report? Okay, good. Then I want to then take a look at the other contract services. And I really appreciate you and your team pulling this together. I know this was a request from one of our commissioners, and there was some concern that there was perhaps not sufficient insight into this category. I'm overwhelmed by the number of items and the relatively small dollar. I mean, we have pages of items here. I guess my question to you is categorizing all of these items as other contract services the most helpful way to approach this, both for the departments involved and for this committee and the commission?
Over the year and a half that I've been here, I have tried to streamline where exactly we charge items. So, for example, even leases would be captured under other contract services. And I'm working with division managers to make sure that leases like software and computer leases are booked under software leases. So I'm not only working with the division managers, but my team as well, to be more cognizant of the type of service that that is being invoiced, so that we capture it in its own category. So we've made improvements in that area over the last year. And looking at these, I believe that they are correctly booked under other contract services. We could do a little more closer look at this and see. So for example, we have our services with the inmate services at the jail. It's a very small amount, but I think this is like the best place to put those. But that is how the nature of all these numerous is because the nature of our work. If I gave you office supplies, it would be much larger. Special program, special department expense covers all of our presenters, for example, and supplies, and it's a very, very long list. And my understanding or what I understood is that the finance committee wanted detail. And I provided the comprehensive detail here for you all.
Yeah, no, I appreciate that. And I don't have an opinion. I don't have a direct ask. I'll just say, and I'll open this to comments from any member of the committee. In looking over this long list of items, copier contracts seem to appear multiple times every month, as did extra help or temporary labor. I'm just wondering if lumping them in under other contract services is the best way to temp work. Temp work just showed up over and over and over again.
Yes, and that's because we get invoiced every 2 weeks while we're employing this temp work. So every 2 weeks, we're paying an invoice. So yes, I gave, what you have here is every invoice that we paid, you have it.
Do you have a sense, and I'm not trying to put you on the spot, if we were to break out copier contract or pull it out, do you have any idea of what the dollar amount or the number of items would be that we would reduce this? And similarly with
the number
temp
of
work?
vendors, it would be a much smaller list than this. I'm thinking maybe under 20 about, and so the ones that keep coming up are, for example, Power Business Technology, which are our copiers, photocopiers, our hold notices, which unique management services. So it's about 20 or so vendors.
Yeah, any questions or comments or requests from the other members of the committee? Barbara?
Thank you. I just had a few questions. On the temp work, our subs are not temp work, right? So temp work would be roughly what people working in?
I would say most of these are under our accounting division.
Okay.
We hired later in the agenda is the forecast. So we hired professional services under Robert Half. Under accounting, we've had vacancies, so we hired temp employees to cover our vacancies.
And let me just add to that. We do have a next year's budget extra help for budget and finance, but because of the nature of accounting work, we really need people who have experience and can start working right away. So that was one of the reasons why we have used temporary services for budget and finance. But the expectation is that next year, we'll have an extra help person and we'll be able to recruit somebody with those skills and give them the training they need so that we, we'll be able to address those issues with the extra help.
Right, and the extra help is more of our, accounts payable. This time, it is unusual because we had a special project, which is a forecast. And therefore, these are highly skilled individuals with finance and modeling experience.
So the temp work week, is that per person then? I mean, some of these line items, or is that everybody who worked for us for 1 week through Robert Half? Is it person by person?
It might be person by person.
So, and just a couple of quick, just for my information, Ernesto Sanchez teaching the classes, where are those?
That's through the literacy department.
That's a literacy, CLLF.
That's a California Literacy, I forget what it stands for, but it's a California Library Literacy Services, I think is what that is.
Okay, and then Kat Gore used to be our staff person, and then she resigned and coming back as a contract person. What's that?
Yes, we hired her because we had a gap in the marketing communications department. Now that we have a person who's begun doing that, we're hiring somebody, so her contract will expire.
Okay, yeah, she popped back up last week, so I wondered, no, she does great work. I saw her exiting through the personnel report that we got, and then I saw that on here. Right, I think I just had those informational questions. Thank you.
Thanks, Barbara. Any other questions or comments?
I just think it's, even if it's just for one time, I think it's great to see these things.
Yeah.
Just so that we know. And
Yeah.
Thank you so much for doing it.
Yeah, I do too, and I appreciate the extra burden we imposed on you and your department. I also appreciate the reminder from you that, hey, we as a committee do not need to and should not be trying to look at the line item level for every expense of the library, but rather should be looking at it from the big picture of services and supplies. And within that, this category, I certainly feel like these are all legitimate, reasonable business expenses, and I have no issue with it. So thanks for doing that. Okay, I'm going to move us on to the next item, which
See you every month.
no, gosh, we do not need, I appreciate, this is a one-time thing. We do not need to see this every month. I'll just say from time to time, we may ask for detail of an expense category, and I hope you'll let us know if that becomes too onerous, a burden.
I'm happy to partner with you on your request.
Okay, thank you. So update on the Friends Group's donation. I have to admit, this was, and I apologize, I know I've been away. This was a surprise to me. I was not aware this was even an issue. Why don't you take us through a little bit of the background here, Myrna, and review what you found and what we're going to be doing going forward. I know Dave has some questions, and I expect other members do too.
Yes, so one of the practices that had been happening and was a financial report to the Friends groups on a routine basis. Since the retirement of Ken Neiman, that stopped. And so since I arrived at the library, it was brought to my attention that the Friends groups and the branch managers wanted to know what was available to them so that they could continue to do their best planning. And I was notified that there was this regular report that was provided to them. And so and that's one piece, and knowing how important the Friends groups are to each of our branches and the library system as a whole, and having worked with Friends groups myself, and they have a very clear purpose. They're very committed, and there's a lot of hours and work and fundraising that is done, and for the library is very valuable, and for me as well. So in the work that I've done to put together a work plan for updating procedures, one of them was to reconcile the Friends groups and to have a process updated and rebuilt basically with the Friends group. So it was part of my reporting at very high levels that I would be working toward reconciling the Friends accounts. So in doing that, when Julie Brown was here, that was one of her major assignments, and she reconciled and worked with the county as well to go back into historical records to provide the best information that the library had at hand to report back a baseline, or where we were, right, a status with the Friends. So in doing that, she did present to each of the Friends groups. I don't remember the exact date, but I would say March, and gave an oral report via Zoom to the Friends groups. So since then, I've met with the Rohnert Park Katati Friends Group and presented a report like this template that is attached. And they found it very helpful. And this is basically the template that I'm proposing to provide on a quarterly basis to each of the Friends groups. And so we presented this at the Rohnert Park Katati Friends Group, and they still had some additional questions, and we'll work through those in the next few weeks. But I wanted, and Commissioner McKenzie at the last Finance Committee wanted an update. So therefore, in this report, I am sharing with you what the available balances are in each here at the library with each of the Friends groups, and what the library's template would look like for their quarterly report, with details of all of their donations that they've received and how we've spent their funds for that quarter with a running balance. And then I also have a request of the Friends in return, so that we have solid records, not only on this library side, but also on the Friends side, because if there's ever a question, we know what kind of records are at hand. So those are the procedures going forward that are in the report that I will be asking each of the Friends groups to please adopt. And some Friends groups are already doing some of these things, and some may not be doing it as consistently, but if we have it in writing, we all can go back to what we'd agreed to.
Thanks. So I have a few questions, and then I know members of the committee do too. I'm gonna back you up, I think, to a more basic question. This chart that we're looking at on page 25.
Mhm.
Am I right in thinking that these numbers represent money that each of the Friends groups has given to the library, but that the library has not yet spent on their behalf?
Yes, this is what's available for spending.
Okay.
It is historical.
Okay, so this is not, for example, although I've missed the last couple of months because I've been gone, I generally attend the Friends of the Healdsburg Library, and they have a treasurer's report. The amount that they report is not this amount. This is what they're reporting is the amount they have in their accounts. They presumably have already transferred this money to the library, right?
Yes.
In general, kind of going forward or best practice, when a Friends group gives us money, do we spend it, or will we plan to spend it
So I could
quickly?
Well, that's the whole thing, is that it is our responsibility to spend the funds according to the agreement, and in a timely fashion, or whatever the terms of the agreement were. For the most part, what happens is a branch manager will make an ask of the Friends groups for, to support an event or to support certain programming, etc. And the Friends group will normally meet that request and write a check. It's like a personal bank account, and that's what the check looks like. It's not a business account, or I don't know how they hold their funds, but we receive a check, sometimes with a letter that says what it's for. And on our end, on the accounting, we receive the check. If there's a letter that comes from the Friends, a letter, and also internally, we create a blue form, which is a donations form, that then we route throughout the library to notify folks. Like sometimes it's a donation for books, So in that blue form, we make a note that it's for books and we route it to the acquisitions and the collections. They note it in their Horizon system and they track their balances and what purchases they make. And then we reconcile those on a quarterly basis. Sometimes, and we also route it to our fund development person, and the fund development tracks donations like this.
So as far as how it should work and going forward, that sounds great. And I realize this is another one of these unknown problems that you inherited. So I, please, I'm not, blaming you or your team. I'm just trying to understand. Do we have records from the different friends groups so that we know, for example, what they wanted us to do with the money that we now have? Or do we have the money without really knowing what their past intentions were?
This is the work that I've done within the accounting team, and did our best. We do have a list going forward from July 1, 2022 forward. This template that we have, we can tell you what the purpose of each of the donations were from July of last year. Going back, we do have some information. It's not all comprehensive, but what we do have is the balances of unspent or basically available for spending. And if you look at the template, at the top of the template, it says beginning balance. So that would have been all of the historical donations that not have been spent through June 30th, 2022. That's what this balance would be starting on July 1. For example, with the Roanoke Park, if they give us records, we can match them, but we used our best records that we have now.
Okay, so I'm going to get to you in just a second, Barbara. Hang on. Final question. So understanding what's done is done, or what wasn't done, but current state is each of the friends groups is maybe discovering for the first time that they have money available to allocate that they didn't know about. What was the reaction you got from the friends groups? Are they okay with the current situation? Realize that we're kind of digging out from under, and was there, what was their general response to this?
The general response was good news overall. I think what is important to say is that the branches and the friends groups have the closest relationship and understanding on how they like to operate. And so because there are these balances here that are available, my recommendation is that the branch manager and the friends discuss how to move forward. From my experience as a executive director of a nonprofit organization, I've dealt with these situations many times where I needed some flexibility, even though there was a donation made or a grant made to the organization for a certain budget for certain items. If things change, and if I needed some flexibility and wanted to change the way the funds were going to be used, I went back to the organization and said, I need some flexibility. And as long as the funds were used for the same program or the donors priorities, is generally we came up with an amicable solution. And their purpose was that the charitable organization, my organization, received the funds so that I could operate and serve the people that my populations. That was the end goal. So I've seen these situations in the past, but I believe the important thing is that we have a process going forward. And we want clarity on both sides. It's a partnership. So that if there are any discrepancies, we can share documents and come to an agreement.
Great, thank you. Okay, Barbara and then Dave.
Yeah, I want to add a little more clarity if I can. Take us back to the last finance committee meeting. And I came here after going to the Friends meeting. And so I'm wanting to like brought this topic up. So I just want to add a little historical under cover or something under the web for the whole thing. But back when we used to see so many reports before we trimmed down the reports that we got. And one of the reports that we got was always this thing that was the gifts and donations thing. And we would ask about how come all this money is still on the books that the Friends gave us. And, you know, Meredith, with having her full plate of stuff, said, I'm going to get to that. So eventually that became Julie Brown's project, as I understand. And then Julie Brown, as Meredith said, went to all the Friends groups and said, this is what happened. You, the branch manager, we'll say Healdsburg, the branch manager of Healdsburg went to the Friends and said, I need $5,000 for books. It went through the process. The books were purchased. So the Friends, what the Friends were going to pay for got purchased, but it wasn't charged to the Friends. That's why there's a balance showing on here. It was the regular library funds paid for it.
That's
So-
what it is.
So the important thing to know here is that the way that it was taken by the Roner Park Friends was, oh, you didn't spend our money on what we asked you to. Reality is, yes, the library did spend the money on what the Friends asked for. They just didn't charge it to the Friends for doing that. That's why the money's on book. That's why I asked for an updated report, because we've talked about this numerous times during our Zoom meetings. It's one of those reports that the county, provided us. It's like, this is kind of wacky. So anyway, that's just an important thing to understand. And then I'll save my questions, but I wanted to add that.
So Barbara, just so it sounds to me like that's for the Friends. It's kind of the best of both worlds. We got what we wanted, and oh, by the way, we were never charged for it, and now we've got the money available to
Right.
allocate again.
But in those meetings, what Julie said to the Friends was, it's not really your money because we already bought what you wanted, but this money's on the books. And we're going to come back to you with some things that you might think are good ideas to spend the money on. So it was a very mixed message that you could spend the money or you couldn't spend the money. And there wasn't, again, a written report. It was very confusing and it stirred up quite the maelstrom in our Friends group anyway. And so Myrna was saved the day and came with this whole structure and a way to approach things and came to me just this Monday to clear things up.
So what I'm understanding, and I guess this is a question for Myrna, is it's not quite the way that Julie presented it to the groups. The Friends can still make requests for how we're going to allocate the money. If needs are such that we want something maybe a little different, we might go back to them, but it's not like we're saying, you guys gave us the money and now we're going to go spend it on something else.
Well, like I said, my recommendation is each Friends group has a process with their branch manager. So I would say, the way I saw, I attended the Friends meeting for Roner Park Katati last Monday, and the branch manager made a request and made a list of how she's made a request for some funds and delineated how those funds would be used. So if that's a process that another organization does, great. So again, with Roner Park and at Roner Park Katati, I would say, use your normal process to have a conversation. Or if there's whatever your normal process is, I would say, I think that would be the best practice, with allowing some flexibility. So it really normally is the request comes from the library.
Through the branch manager.
Of course,
Yeah,
yes,
right.
it's for the branch. So all the funds that are here are specifically allocated for these branches, and they will not be used for another branch or another service.
Okay, thank you.
Right, and I want to add that, whatever the money is used for, it always needs to benefit the library and the branch, that we would, you know, highly discourage a purchase of something that was not going to actually, you know, benefit the library.
Understood, yeah, and so what it sounds like is the whole purpose of this process is to provide much more timely reporting and accountability so that when a friends group and a branch manager get together and make a request, that they know that it's fulfilled in a timely way.
Sure, for example, you know, I found out that there was some programming that was that the Friends donated to support, but then the course was canceled. So the agreement was, the mutual agreement was to keep the fund with the branch and not request a refund or a return. So therefore, that little money is going to continue to grow there, right? So these are things that we will know when we reconcile on a monthly basis and provide a quarterly report.
Excellent, thank you, Dave.
Yes, it seems to me that what Barbara said is what I understand from the text of your report, which is the money was donated to the library by the Friends. The accounting system couldn't handle it, you know, and it says here, the work, that is what the Friends wanted, was paid with other allowable funding sources, that is library funds, our funds, leaving the Friends funds available. That means they've been paid. And the funds here are our funds to collect to our collective bosoms and spend on anything we want. Otherwise, the Friends would be double dipping.
Good.
And I don't think that's correct. It's also not what your report says. So maybe we could start with, I assume you got my email this morning. Do you have the total available balance, total?
I didn't total this. I asked my staff to give it to me, but it's about 700,000.
Okay, you wouldn't have any closer than that, right? Okay. About 700,000.
It's a little over 700.
Okay, so this, to me, we would be breaching our duty to the library system to give the Friends the money back that they've already had the work done and paid for by us. That's just my view. Maybe we need a supplemental report about this, but I don't think it's good practice. So are any of the funds, okay, let me give you a stupid example my wife and I came up with, okay? Suppose that the Friends, when they sent you a given $1,000 as a result of some donation that was given to them, said, our plan is that this $1,000 must be spent only for books with blue covers. Okay, suppose that's a restricted donation. When this came in the past, would it have been honored or not? How much detail did you take in, or did you just try to, well, this isn't your problem. Did the earlier staff say, well, it's okay, we can go ahead and purchase books with yellow covers, and that's close enough? So what's the status of restrictions that's the Friends group submitted with their stuff that the library later paid for? Or what kind of restrictions did they make? And the work that was paid for by us with other funds, were those restrictions honored?
My understanding is that the purpose of the funds were honored. You know, so I could say, for example, because I just know at Roner Park Katati,
Mhm,
the Friends supported the seed library.
mhm.
The seed library is intact. It happened. It's there. We can see it. We can touch it. We know that it happened. Is a seed library something that our funds can pay for? Certainly. Right, but it was the Friends that decided they wanted to give a private charitable donation for. But it is certainly something that is a library use, and the property tax or even Measure Y could fund.
Okay, well, let's slip past the issue of whose funds they are for
Well,
the moment.
So
And-
I would say that, you know, we're not gonna spend money on frivolous things, that we would expect our branch managers to discuss any purchases with their division managers. And I know when I came here originally, I remember there was a $15,000 purchase for a sculpture for the Petaluma garden. And those are the kinds of things that, you have a conversation with, and something like that would be probably approved by the library director. And I believe at the time that it was Anne who approved the purchase, that it's not like they're just buying things, it is a conversation between the branch manager and the friends. And that if the amount is over their purchasing authority, so we have a delegation of authority policy, which stipulates how much each management team member is authorized to spend. So anything over 5,000 would have to come to the deputy director or the library director. So we do have these other controls in place that kind of limit, what people can spend and how much they can spend. But like I said, it always has to benefit the library. So if somebody said, I only want you to buy blue books, I as a manager would say, I don't think that's a reasonable request. Because how would you make those selections, and, that is the conversation that a branch manager would have with their friends.
And you don't accept a gift like that, like a donation, you don't accept it because you're.
But you know, approve the restriction, right?
Right.
Okay. Now, this, there's a lot of coming and going of money into various accounts here, okay? I'm concerned about Measure Y. Did any of the accounts into which friends' donations went, is here, or accounts that the library used to pay for the work that the friends supported, or accounts in which any of the friends' funds presently sit, ever contain any Measure Y funds?
So the reporting has been made to the Measure Y committee, all of the expenditures under Measure Y. And like I said, items that the library purchased and paid for are all library bona fide, legitimate library services or items. And therefore, we could use the property tax or Measure Y.
Okay, but that's not exactly what I'm getting at. We have an accounting gap of 5 years here. Okay, my guess is that you don't really have exact knowledge of where the money went, right? I'm concerned that, and so we don't really know what the oversight committee knows. And now you know much more because you've done a detailed research report here, which they don't have, or do they? Should they be informed of this report and of the new process going forward? So they will know we had a big problem and now it's fixed. Or is this something that you don't think the oversight committee should hear about?
Can I jump in for a second here? Dave, I want to see if I'm understanding your question or your concern properly. Going forward, let's make a distinction
Right.
between past and future, right? Going forward, it would seem to me that what we're discussing here has nothing at all to do with Measure Y, because the source of funds is not sales tax. The source of funds in this case is donations from friends groups. Now, as Erica has pointed out, because of the process that we're going to use on the relationship between the branch manager and the friends, we would never want to spend any money on things that were not going to benefit the library as a whole, and in this case, the branch specifically. But because these funds are not coming from sales tax, Measure Y is not involved with going in the future.
I'm not concerned with the future.
Okay, all right, so I just want to.
There's an excellent, you've done an excellent job in coming up with a process. I'm particularly concerned, take the collections budget, okay? They got these requests in the 5-year period. They went into their collections, paid for this stuff out of our own funds, not the Friends funds, because the Friends funds are still here, okay? So some of those the collection budget would probably have been attributable to Measure Y. Yes,
But all of our expenditures over the last 5 years have been allocated according to either the current policy, which Myrna developed, or to the prior policy. They've all been audited. They've all been reviewed by the Measure Y committee. I'm not sure what's the potential problem that you're trying to get at.
the potential problem is that we may have commingled funds in buying stuff that the friends wanted us to buy. But with funds that were not friends' funds at all, they were our funds. And they may have included some Measure Y funds. I'm sure this is perfectly appropriate. I just want to know if it's been reported, like you mentioned. Nobody knew about this. None of our auditors were aware of this problem. Year gap, missing not complete records. Which leads
So,
to my last question is. Now that we have adequate controls in place. Is your understanding that this means we will, and the program was cleaned up this fiscal year? Do you believe we can still we'll get a
Hey, Dave,
clean
would
audit?
you,
Oh, sorry. Yeah, sorry. Now that we've cleaned this stuff up and we have good controls going forward, it's always the test for the auditors is, are the management controls adequate? Do you think they will give us a clean audit report?
the auditors will audit this current fiscal year, July 1, 2022 to June 30th, 2023. So having this process in place, we've cleaned up all of our accounts, and we have a procedure in place. They would be auditing our work for this year.
So you think they're gonna be happy?
I am hoping they'll be happy.
Okay.
I don't see why not, but they may be looking at something different. I believe that this is a transparent, clear, and with internal controls. And those are the things that they work. We did not commingle funds because the Friends funds were deposited into the Friends account. And we were just using other funds. We have found the root of why that happened, and these controls in place will prevent this from happening, in particular with our reporting in place.
Deborah?
We go. I would think that, especially since we identified a problem and here's our solution. I think that usually the auditors are very good about acknowledging that there was a bump, but there's a solution. But I would go back to David's first point, which was if the library system bought the stuff the Friends wanted bought, then I'm not sure why the Friends get the money to spend again.
Well, it's not, we cannot, if you would like. One of the agreements that I have with Rona Park Katati is, if you have a discrepancy with these deposits, it could be, we can then, now we have something else to go with to research, right? But if you would, in our almost $50 million budget, and we were talking about a few $100,000, is it reasonable for our staff to spend additional hours to work on an item like this when we know that the funds were spent on items to benefit the library?
I think staff did a fine job. It's just, it was just the recognition, but I also think though that in some systems annually, the library says, these are some of our wishes. These are usual things that you buy for us. This is an audacious goal, and we can save for that. Or maybe we can work with another branch to do a bigger project. So it would be nice to have perhaps annual conversations about what the library needs, you know, this year, for 3 years, for 5 years or something, so that the friends then can take a look at what they want to do with their money, and then we can have open conversations, because I think this was just a surprise to people.
And I would say that, you know, it wouldn't solely be the friends who would say, this is how we want to spend the money. That this is a conversation between the branch manager, the division manager, and the friends, and that everybody will be in agreement about how the money is spent.
I agree with that. I'm gonna offer a little different perspective to
Okay.
what you're saying. And I'm gonna come back to Myrna's point. We've got a $50 million budget. Our budget over the last 5 years, what's that, $200 million? We're talking about $700,000.
I agree.
Given, and because of our own inadequate record keeping, even though in general, we believe that we followed up and did everything the friends wanted, we can't really provide them with an itemized record, and to do that would require an enormous investment of time and effort. To say, well, we spent the money, but we're not going to give you records, would risk alienating the friends groups that we depend on. It's not worth it. We're much better off saying, you know, in good faith, we believe that we did make all these purchases, but because of our inadequate record keeping, we're going to assume that you still have the funds available, and we're going to be working together in a healthy partnership to commit those funds for the benefit of the library as a whole and your branch in particular. That feels to me like a much more saleable message, and I would urge the committee to support that.
I hear you.
Okay, Barbara?
A couple of things. One is the original report, as Julie came over and she said, this is how much you have on the books. We bought the stuff you wanted, but we didn't charge it correctly. So there's 82,000. The number has changed because you found some more stuff. But the attempt to address this middle ground that you're both kind of talking about, which is it's still the Friends money and it should be spent for that particular Friends library. So there were 2 or 3 ideas that also came along with that. It's like, well, we're suggesting covering the outside patio, doing this and that. What do you think, friends? And the ideal answer would have been, fine, that sounds good. That's for our library. It uses the money. If this conversation starts sliding into for the library as a whole, I can tell you that will not work for the Friends groups, because it's definitely oriented not for the system. These are gifts to their library. So I hope we don't blur the language in that kind of way. It still hasn't calmed down all the way.
And I would say that to David's question, are these funds restricted? Yes, in the sense that they are restricted for the use of the branches. So Cloverdale branch has $16,654. So it is restricted in that the library is not going to take this money from Cloverdale and spend it on Sebastopol, that it is for use for those specific branches. So in that way, it is restricted.
And I'm going to say, and I'm going to try to clarify what I meant by when I said the system as a whole. Yes, the funds, from my perspective, are for the use by the branch in a way that is consistent with the philosophy, mission, reimagining plan of the Sonoma County Library as a whole. I can't envision a situation in which a branch manager and their division manager and the Friends would agree to spend the money in a way that we all gulped hard and said, geez, this really doesn't feel like we should be spending money this way. So it's all going to be specific to the branches, but philosophically, it's got to be aligned with what we're all trying to achieve, right? So, okay.
But I would also add, and yes, this is money that the branches, I'm clear, they can spend it the way they want to. That said, in the future, that doesn't mean that some of the branches can't work together.
Right.
That's all I'm saying.
They want to.
If they want to, of course, but they should also, it should be mentioned as a possibility to them.
And I think that's I'm gonna look over at Craig, that's kind of an ongoing, it is discussion in the sense of even though we're a system as a whole, we still have a lot of individual branch loyalty that we could debate the
And it's good.
relative merits of. Dave, final comment or
Yeah.
question?
I think your approach is the correct one, Andy. This answered one of my other questions, which was, is it correct that if a friends group asked for a formal accounting of how their money was spent, we couldn't give it to them? So this is a legitimate way of saying, okay, we can't prove what we did because we don't have the records. So we're gonna assume that we'll still allow you to use this money. But it's because of our own fault.
Right.
I didn't realize.
It's a win for everybody.
Yeah, but going forward, we clearly have, I
Oh,
love
no
the
problem.
process that you've outlined, Myrna, and I think that this kind of timely reporting and ongoing partnership will be essential. Final comment, Barbara?
Yes, and to all of that, and I would say that Myrna, when she, in her presentation, led with an important point, which is trust. And in the past, it's been an honor system, and it's trust, the branch manager asked for something and was purchased, so I don't think anybody's ever been, prove it, kind of thing. And back to this point about there being in the old days a report, I don't think that was true. I mean, I think this is a new day, be a great report. My only question is like, who's gonna come to the individual friends groups and do it? I think it'd be great if somebody from accounting, could do that. So anyway, but, this is night and day from where we've ever been.
Right.
Yeah, thank you, Myrna and team. All right, now we're gonna move on to the next agenda item, which also represents an enormous amount of work by Myrna and her team, and that's the 5-year forecast. I thought that the summary and the financial statements that you provided were really clear. Again, I'm going to invite you not to repeat all the great work you did here, but do you want to call out a few key highlights for us,
I
please?
do have a PowerPoint.
Oh, wonderful. Okay.
It is.
You
Why am I
continue
not
to
surprised?
exceed our expectations. All right, I'm going to shut up and let you go through it. Lisa, I think you need to start the recording again.
I have it recording and I just
Oh, okay.
unmuted.
Okay.
Okay. All right. Well, we're back online. Thank you for your patience. Here we have the Sonoma County. No, I guess. Okay. So this is the long-awaited Sonoma County Library forecast for fiscal years 24 to 2028. It's a 5-year forecast. And we hired professional services through Robert Half to prepare this forecast model. The purpose of the forecast is working. What is your Okay, there we go. The purpose of the forecast is to help make informed budgetary and operational decisions by anticipating future revenues and expenditures, as well as highlighting anticipated fiscal risks and opportunities. The projections are also designed to present a view of the library's fiscal health and provide advanced news of future issues and opportunities given the existing economic conditions. And the forecast is also a necessary strategic planning tool for financial stability, and sustainability, and also ensures compliance with current best practices across libraries and government agencies. Under the current economic conditions, we reviewed national, state, and local conditions. And like I've said, at the beginning of this meeting is that nationally, we've and locally, we hear a lot of economic uncertainty because of interest rates that have over the last few months kept creeping up. And has tightened the financial markets and affected lending in particular. However, when we look more closely locally here, there have been concerns of median residential home prices declining, therefore affecting our property taxes, and also the impact of inflation on household purchasing power. Our property tax has remained robust in projections in fiscal year 23 and 24. And this is based on assessments that are done in the prior year. Also, we have found that in our research that Sonoma County home prices overall have declined perhaps 2%, 2.5%. And that was really based on from last year at the time of winter in February and March, and the very slow and very sales and very few homes on the market. However, as the regular cycle goes for home buying, a lot of more homes have been on the market since March, and so this has been positive. There's still people that want to buy homes and understand that our interest rates historically, looking back, are not as high as they once have been. So people are still buying homes. But what is more uncertain is the impact of severe climate change and catastrophes, droughts or floods, and what their financial impact is to predict in a model. So what we've tried to capture here in the forecast are the upcoming needs of the library. And we know that we have two major revenue sources. Property tax, which is our general fund, and it is approximately 60% of our revenue for overall revenues. And we also have a sales tax that is a 10-year voter-approved tax measure. Given these two scenarios were developed. The first was with grand assumption that the sales tax renewal is approved and we continue past March 31st, 2027. The second scenario assumes that the sales tax expires as of March 31st, 2027. For scenario one is where we assume that the sales tax is renewed, and we have key findings. One is that we have a robust revenue streams to support ongoing our strong financial position. It fully funds the stabilization fund and supports growth of innovative services, especially to reach our underserved areas. It funds commissions, existing priorities with available fund balance. And those are the following. It reduces pension obligations by making an additional $10.5 million investment over 4 years. and continues investment in branches with strong capital improvement programs. I'm gonna do that. So as you can see here, in the one of the main highlight is our fund balance. And we do use as a practice, we've been paying for our capital projects through fund balance. And so also the additional payments against our accrued unfunded liability is also the use of fund balance. So that's the line that you see at the bottom that says combined use of fund balance. We do use it, and it's these numbers in brackets are that we are decreasing our fund balance. So in fiscal year 23-24, we will be using $7.6 million of fund balance. In fiscal year the following year, 24-25, we'll be using $7.5 million. In fiscal year 25-26, we'll be using $1.9 million. And the reason for that decrease is that we are reducing the investment in capital projects. However, and so on, and in fiscal year 26-27, again, we reduce our investment in capital projects. What is happening here is that fiscal year 24, in our proposed budget, there's a list of capital projects. And the assumption is that we will continue to fund those until they're complete, and that will take 2 fiscal years. And then in the third fiscal year, which is fiscal year 25-26, again, what we're doing is going back to our average capital expenditure, annual expenditures, which is $3 million. And so therefore, we do see a less use of the fund balance. And in the last year of the forecast, 27-28, there's actually an increase to the fund balance of $1.4 million. And that is because of the robust revenue. And again, the assumption of spending just $3 million, keeping capital costs at $3 million. In scenario 1 continued over the 5-year scenario, and we do use the available uncommitted fund balance. And again, I do want to just make it really clear that the library staff is proposing to pay down our pension obligations and use that fund balance, which is one-time in nature. And also the capital projects, we do reduce them starting in fiscal year 25. That way we have we've completed them. We completed our projects through fiscal year 25. In fiscal year 26, we return to a $3 million average. So a total of investment in over the 5 years in capital projects of $22.7 million. And you can see this, the green is our revenue and the yellow is our total expenditures. So because the yellow is greater than the green, the difference is the use of our fund balance. Now we go to the scenario 2. And in scenario 2, first of all, we want to say it, you know, it assumes that the measure Y, the sales tax expires. So we know that we lose revenue. Therefore, we said, well, let's reduce some of our costs that do not impact our operations. And those are that additional proposed additional payments toward our pension obligations. And also reduce even further our capital projects. And then the last 2 years of the forecast completely eliminated capital projects in order to save and to reduce our expenditures and reduce the reliance of the fund balance. So the sales tax expires on March 31st, 2027, and the library starts to use fund balance to cover the lost sales tax revenue. So this model assumes no additional reductions to operations. So operations remain the same. And that in the first year that we lose sales tax is a total forecasted $4.6 million. In the second year, which is fiscal year 28, sales tax revenue loss is a full year of revenue of sales tax revenue, which is projected to be $19.5 million. And in fiscal year 28, what we see here is a combined use of combined fund balance of $12.5 million. That again is assuming we do not reduce any operations. We keep operations as they are. And we would have to use a combined fund balance of almost $12.5 million. Scenario 2, again, to continue on scenario 2, with sales tax expiring, we will use we could use a combination of fund balance. That means that property tax would offset the revenue loss of the sales tax. And here again, here's the graph where it shows, you can't see my finger. So in fiscal year 24, the big drop of revenue in the green, and our expenditures will be 139%. No. Expenditures, yes, percentage of our revenue is 139%. Okay. Now this one is important. This shows the impact on our fund balance. And here, again, we reduce major expenditures of one-time nature, which is the additional unfunded accrued liability, and reducing the capital projects, which is a savings of $18.8 million altogether. But the interesting thing here is that even with reducing the expenditures by $18.8 million, there is still a deficit under sales tax. And because of the split that we have, the allocation of capital 90% to sales tax and 10% to property tax, there's a significant savings on both ends, but it does benefit the property tax fund balance. So the property tax fund balance here is scenario 2. We have $18 million in fund balance in property tax and a deficit under sales tax. So if the property tax will offset the deficit in the sales tax, and we still have $5.5 million in the fund balance. So the point is that overall, the library, if should sales tax expire, it could fund the library for through fiscal year 28. But having said that, the important matter here is that the point of a a financial plan like this, or a forecast, is that it highlights when exactly do we start losing funds, and what strategic planning are we going to put in place, so that one of the proposals from the commission is a reduction plan, 10%, 15%, 20%, to meet any of revenue losses. Not only a reduction plan, but on the flip side, what new sources of revenue are available. So that is what the point of these plans is to highlight those important periods of when we need to start implement decisions that we can start planning for early. The other is, the interesting thing is also that the library is planning to go out for go to the voters again for renewal in FY 24-25. And so therefore we will know early if the voters decline, or we also have another opportunity in fiscal year 25-26 to ask the voters to support a tax measure. So we have been very strategic and timely in our planning already, and this is yet another tool to inform the commission and administration to make prudent and timely decisions. So I wanted to present to you what the key findings were of the forecast, which did take, wait a second. Oh no, I have to go back.
The previous one?
No, let's do, I'll do it. I wanted to go over the assumptions that were used to build this model. First of all, we looked at historical data, analyzed critically each of our accounts that you see in your monthly reports to look at trends, in particular for salaries and our benefits, which are our greatest expenditures, our services and supplies, and our capital projects. The assumptions that are underlying our models and our scenarios are that salary increases by 4% for the COLA in our current existing labor memorandum of understanding. But that memorandum of understanding expires on December 31st, 2024. So therefore, there are no COLAs because there's no MOU past that date. We also added new FTE in fiscal year 24, 25, and 26 to support in fiscal year 24 our community engagement division, fiscal year 25 ongoing outreach with a bibliobus and staff, and in fiscal year 26 is preparing for the grand opening of our Roseland Regional Library. In terms of benefits, they're projected to increase as well, but you will notice that pension costs are for our normal costs stay pretty flat, and that's because our classic retirees or employees would have retired, and our workforce is increasingly represented under PEPRA, which there is significant savings under PEPRA. Also, healthcare costs are calculated as a percentage of salaries, and as salaries change, there's not a significant growth in our salaries. So we do see a growth in healthcare costs, but not significant. Under scenario 1, again, we are assuming to pay down our pension obligations and remain having a robust capital program. Under scenario 2, where the sales tax expires, we did not include the discretionary pension payments, and we reduced capital significantly. Under services and supplies, we do see an increase of 1% year over year. And it does assume increases in our current leases. And also important to note is, and it does affect our expenditures as well as our fund balance, is the capital expenditures. And that we allocate those expenditures 90% to sales tax, 10% to property tax. And what is not in this model are an MOU, labor MOU, past December 31, 2024. So those, when we do have a new MOU, we will have to account for costs of any and of what that MOU would include. However, it also does not include the Roseland Regional Library capital costs, as those we are funding fully with state grants and private funding and foundations. Also, it does not include leasing or acquiring a new building. So if we have a bigger space, of course, we may be paying more in lease or acquiring a new building. Also, it does not include contingency plans for new revenues or expenditure reductions of, as I mentioned, 10, 15, or 20%. And also these, it does include, we will review our assumptions on a semi-annual basis. So that concludes my presentation.
Dave
Yes.
and Barbara.
This is an impressive presentation. I would like to know if it's practical to come up with a list of what happens materially if scenario 2 is something. Closing buildings, staff, so on, after fiscal year 2028. So that when we start to tell people about the need for renewal, and say, this is what happens if it doesn't get renewed. And just table is something I hope you and Erica and others, your ilk.
Dave, I'm going to just comment. I feel like that's something that could be done based on the projection, but it's not, to my way of thinking, part of the work of the projection. This would be a separate
Yeah, definitely.
thing.
Mhm.
Yeah. Okay, Barbara.
Yes, thank you. I tried to digest all this. I want to comment that on page 32, the library plans to place a sales tax measure on the November 2024 ballot. To my knowledge, this has never been formally voted on or decided by the commission. I'm not saying it didn't happen, but to put it in a report as a foregone conclusion, I mean, we need to bring it up to the commission level and decide to make that decision, which hasn't been made. I wanted to ask, what are the additional estimated discretionary payments, and where do they show in the scenario 1? What's the amount?
I believe in your report, it doesn't, can you go up to slide 5?
Mhm.
I don't know if you can blow that up. So here, it is not delineated in your report, but it is up here in the PowerPoint. As you can see, where's my phone? Can you see that?
No, I can't. really.
Okay. So under operating expenditures, we have salaries, benefits, and proposed additional UAL payments. As you can see, there's nothing in fiscal year 23-24. We propose to initiate with $3 million in fiscal year 24-25, $2.5 million in 25-26, and $2.5 million going forward.
So why don't those show on our?
I'm sorry, I didn't notice that omission, but I do have it here. And we could give you a copy of this PowerPoint.
So did those flow through to the number
Yes.
bottom lines?
Yes, they do.
Are they all changed too?
No,
Like this-
no, those don't change. We just broke it. It's all lumped there in your written report, and it is broken out here in
Is it
detail.
lumped together under benefits then?
Yes.
Okay, that's what I assumed that one was. The item called, let's see, on page 30, sales tax measure. The narrative part. Yeah, page 30 narrative part on sales tax measure. Yeah. So this says SCL is projected to see up to 19.48 million, so basically $20 million in lost revenue in that fiscal year 27-28, if we don't pass it. Okay, then if we go over to scenario 2, which is the bad scenario. The bottom line on that one is combined use of fund balance of $12.4 million. So I was wondering about the difference between, it seems like we need to.
So what happens is that because if you go back to that black and white.
On your PowerPoint,
Yeah. Oh, no, in this one too, you could
is it in
scroll
this
down,
one too?
scroll down. You could go to
Page 38. 38.
you need 38. 38, yes. So here, as you can see, sales tax still has we start dipping into the fund balance in fiscal year 26-27. And so that 12 million is basically the use of fund balance. It's not the deficit. It's using our fund balance. So we lose $19 million of revenue.
Okay.
But the fund balance in sales tax is making up some of that lost revenue. So instead of using revenue, we're using fund balance.
Okay.
I know it may not be that clear. Yeah, so what you're seeing in terms of the 12, it's the use of, how much are we dipping into fund balance,
Okay.
right? And on the other hand, you have revenue.
Okay, I see. So we're going to have a shortfall of $20 million, but that's reflected in the scenario 2. Scenario 2. Okay, scenario 2 down there. Okay, I think I understand that. Then I have another slide.
I'm going to jump in with a question on this slide. here. Can we have a $13 million deficit in a fund balance?
Well, this is an exercise. So
I understand that.
yeah, you can have a negative in a fund balance. Yes,
You
you can
can.
report it. Yeah.
So basically what that means is we're going to be spending money from other sources to make up for the money we don't have.
Yes.
Okay, while Barbara's looking, I had a couple of other, and I realize this is an exercise, but I just wanted to be clear on what the assumptions were versus I don't want people making interpretations based on the assumptions. So for example, when you talked about under scenario one, additional discretionary payments. I'm going to assume that you're not saying we would be making additional discretionary payments as opposed to a section 115 trust payment. You haven't reached a decision on which way we're going to go.
No.
You're just saying we would be making in the amount of, and it could be allocated to either based on some further analysis.
Yes,
Okay,
no, the assumption is that you would be setting aside these amounts every year in whatever mechanism the commission decides.
okay. Yeah, I'm going to ask that you also send me a copy of the presentation, because I had a
I'll
few
send it to everyone.
comments I don't want to do here before you present again to the full commission. Okay. Thank you. Barbara?
Yeah, I'll just ask one more question, just at this point. Again, we want to see that revised report they have, but if at the bottom of the scenario one report that we have, page 34. If we're counting on doing a lot of capital expenditures in 23, 24, and 24. And then we're going back to whatever some usual amount was, I guess, in the past. Like we're not planning on any major capital expenditures out in the same big way. So this ties back to my question about what are our priority lists for all of the libraries. Will all of them be fixed up to the same standard? Are we going to go from a situation where the library has paid the major cost for some of these libraries, and then we're going to go back to assuming somehow else, the other libraries will be paid for, so it's another piece for when we look at these scenarios again, is to have that project priority list and what state all of the branches will be in by the time we're going to reduce our capital budget.
So we will have a capital improvement plan. We have a proposal from one of our contract vendors, but because Dave's on leave, I need two others because we have to do, if it's over 30,000, we have to do an RFP. But anything over 5,000, we need 3 quotes. And so until Dave comes back, we won't have any more forward movement on the capital improvement plan project because, we need his expertise in order to do that.
All right, I appreciate that. I just want to keep bringing that to the forefront here because these are significant amounts of money that we're using for the first 2 years, and then it drops off severely. And if all of the libraries haven't been fixed up to the same standard, then we're talking about a different method of getting them there. So, thank you.
Okay, well, thank you. I want to thank you again, Myrna, and your team. I mean, we've been asking for this. There's a lot of work that goes into this, and look forward to seeing the
I
PowerPoint.
do have another slide that I just want to make sure we have it covered. Before we wrap up the last slide. So the next steps for this are we're gathering your feedback here. And I would like, my recommendation is to come back to the finance committee with your suggestions. And then at some point, when the finance committee is ready, we can present to the commission. And again, we will be utilizing this forecast into future budgets. So we'll be building that in because as you can see, is very helpful to see when things will be happening, what key and major investments will be made. And so we will be updating the assumptions every 6 months. And in particular with an eye using this to help us with our budgeting.
So when do you want to get feedback from the committee?
Well, the feedback we received today, if we'd like, we could come back again and have this discussion.
Well, I mean, we've all asked to see the presentation. I'm assuming you know, when you send it to us, I'm assuming people are gonna have comments or suggestions that they'll want to send to you in writing. When do you want to get those?
I think I need to have I'm not sure if we can have those all in writing or if it needs to be a meeting. Lisa, I don't know.
Want to? You're thinking you want to?
I don't know Brown Act if that's okay, or we need another meeting to have a conversation about.
That's a good question.
I can check about.
Okay, if you could check, Lisa, that would be great. Yeah, and then just let us know if we can provide individual comments or if we need to come back and discuss, okay? All right, thank you. Good. I know we're running really late. We have one more item on the agenda. And I just have one question about it. I saw in this, in the commentary, it said additional, and I realize there's a little typo here, additional goals were included under the provide opportunities for all. I think that should be contribute rather than contribute. But I couldn't see or was not highlighted which were the new goals. Is it possible to call those out?
Yeah, so it was under Empower Youth Development and Lifelong Learning
Yeah.
and under Advanced Climate Action.
If you could just highlight
Oh,
the
okay.
ones that they were so that we did, because they're kind of lost in the text. That's all.
Oh, okay. So on page 40, the goals 1, 2, 3, and 4. These are all, they're not new goals. They were in our budget preparation materials. But they, when we did the budget workshop, they created impact goals for the commission. And so these are, we pulled these out of the budget workshop prep. And then in some cases, in the Advanced Climate Action, we moved, you know, one of the items, number 2, was in a different section, and I moved that to Advanced Climate Action. They maintain library facilities at peak efficiency. Does that answer your
A lot of
question?
goals.
We have a lot more. And so when we do our budget workshop, we actually have goals that are not funded goals, but they're just ongoing things as well. So, but these are all, you know, goals that we think are reasonable and doable in the next fiscal year and that we have funded.
So to be
or they will
clear,
be funded.
these are a subset of the goals that were in the reimagining plan, with the addition of a few items that were not in the original plan, but are consistent with the themes.
If I may, so these goals were present, these are goals. So the in the budget packet, there is, I don't know, there is a document in there with a list of goals under each large category. So in these categories, the reimagining plan has a category 1, provide opportunities for all to learn, contribute, interact, and participate. It has a category number 2, support community resiliency, and then it has a section number 3 for
Fostering racial equity.
Right.
yes, thank you. So those 3, and the goal statements in the budget packet listed 3 under each of our divisions. So since the finance committee requested alignment with the reimagining plan, we took those goals that were in the budget and further aligned them with these subcategories that are in the reimagining plan for further detail. We want to make sure that there's this one-to-one tie with each of our goals.
Any questions, Dave?
Yeah, I'm impressed with the list of goals. They're extremely ambitious, and it's even more ambitious for you to say, Erica, oh, yes, we plan to do these in the next fiscal year. I hope this is true. I mean, it'd be a miracle from my perspective, if half of them were completed. So.
Well,
that's
some of
really
them,
good.
some of them are already in, yeah, some of them are ongoing, some of them are already in progress. I mean, when we did the budget prep, we actually had to list goals from last year that were complete, that are in progress, that we will continue. So it's kind of multi-layered, that some of them are new, that we're gonna, like the Innovation Fund, our community survey will be new, but some of them are ongoing.
Thank you. Barbara?
Yes, a couple of just quick questions and a comment. I overheard some staff the other day saying they're starting to pay team volunteers.
What? I'm sorry,
what? Okay. Starting to pay team volunteers, and so I was under the assumption, I think it's true, that the lunch at the library teens are being paid through the grant.
That's correct.
Yes.
And they're interns, not volunteers.
They're interns. Good point.
Thank you.
And then down under expand technology, could you tell us again what NeoGov is?
NeoGov is a HRIS system, so it's what Human Resources uses to track people who apply for jobs, who are selected. It tracks their training, so we're looking for a training platform where we can put particular training modules and that employees take them, and it will track their progress, whether they took the training, when they completed it. It also includes, all of that recruitment data, so that we can do analysis on, how well our recruitments go, what is the ethnic makeup of our recruitments, what's our retention percentage, how well do we retain employees?
Okay, thank you. I think I knew that, but I know it completely. And then just lastly, again, back to my old saw about the priority list when we talk about under D, consider capital and facility needs in the context of changing needs of community. We're talking about working with the stakeholders and so forth, and we're going to complete Hillsburg and Petaluma. In the budget, it had that set aside for 2 Santa Rosa. The next 2 projects apparently, although I guess we haven't finalized this yet. So I'm just wondering, I'd like to see this I'd like to see added as a goal about the priority list for capital projects.
Yeah, we can do that.
Thank you. All right, thank you for doing this. Barbara, you've already mentioned a couple of times, and I know everybody's taking notes, the capital improvement plan. Are there any other topics for future committee meetings that Dave?
Yes, this is for Myrna. Answer the question, is there anything else? Is there any other mess that you need to, or that you're working on cleaning up? Surprises are not good.
Well, Dave, I think what you're asking for, are there any more known unknowns
No.
as opposed to
Exactly.
unknown unknowns?
That's
Yeah.
exactly. How many more piles of stuff are lying around? And what are they? I'm not asking for cleanups, just what
Just-
else is there?
Give us a heads up.
Yeah.
Thank you.
So maybe if I could rephrase this, what are other projects on your docket to improve our reporting?
Well, to clear up past problems that have not fully been resolved yet. You don't need to answer that now. That's just something, we just want to get a heads up. If there's anything that you're aware of, like the Friends.
Well, what I would like to say is
You
that
don't need to answer this now.
Probably not allowed.
I'm not gonna give you specifics. What I'm going to say is that when I first started, the finance committee and the commission were concerned about procedures, internal controls. because the lack of those internal controls leads to issues like the fronts and other issues. So I have been working diligently to put controls in place with our policies and procedures. In some cases, it's just been clarification, education, and informing library staff of what the procedure is.
And enforcing.
Enforcing. Thank you. That's so much fun. So it's an ongoing process. So one of the areas has been the Friends, the other has been procurement and ongoing reviews, which is an ongoing process, is reviewing our procedures. So I continue to do that. Currently, one of our major ones is cash handling.
Okay, I'm sorry, this is where we're
Yeah.
getting,
Oh,
we're
okay,
getting
sorry.
outside of the agenda. We don't need to discuss this. We're just making a request that we hear from you about these areas in the future. Okay, we don't need to hear it now.
Where will, and I normally do have it on the agenda, maybe that's where we can put it.
Yeah, please.
We'll make sure it's safe to come back to the finance committee.
Yeah, yeah. Barbara?
Can I just offer, I turned the last page of the last item after we closed it out, but on page 42 under work, toward becoming an anti-racist. or
Turn your volume on.
Page 42 under work toward becoming an anti-racist organization. Under 10 and 11, it says provide racial equity training and provide implicit bias and microaggression training. I believe this came up before, whether this is a required training for commissioners or it's just something that is optional and to be offered. And I believe that unless it's a requirement, whether we should maybe have that word be offer instead of provide. I don't know, maybe that's slicing hairs or something, but I don't believe it's a requirement. But not true.
Right, and sorry.
I'm sorry, I don't see where this is in relation to future topics.
Like I said, I jumped back to the old topic, sorry.
I'm sorry, do we have anything else for a future topic? We're at almost 5 o'clock here. Appreciate everybody's focus. I'm going to call the meeting adjourned. Our next meeting is not on a Monday because of Juneteenth. It's going to be the following day, June 20th, here at 3 o'clock. Thank you all.
Thank you.
Well, we don't have to